Hello and welcome to the TM Tax Practices video series, Getting Ready for Tax Season. This is video 1 of 9, where we are discussing the question, am I required to file a tax return? And we're going to dive right into that with the filing requirements. So when we're looking at the filing requirements, we're looking at a few things. That's your gross income, your age, your filing status, and whether or not you can be claimed as a dependent. Now, there are some other mitigating factors, and we will discuss those a little bit later, but starting off with just the gross income filing requirement, we'll look at that. And the first thing we look at with the gross income is your filing status. So if you are single, we look at your standard deduction. Well, whatever your filing status, we look at the standard deduction for that filing status. So if you are single and your standard deduction is $12,550 and you made less than that, you are not going to be required to file a tax return. So the idea is if your gross income was less than your standard deduction, you are not going to be required to file a tax return. And for single, that's $12,550. For head of household, that's $18,800. And for married filing jointly, that's going to be $25,100. And next we look at the age. The age is 65 and older. So if you're age 65 or over, there is an additional deduction that's added to your standard. And for married filing jointly, that's going to be $1,350 per individual. So if you're married filing jointly and one spouse is over 65 or 65 or older, that's going to be $26,450. That's your standard deduction. If you made less than that, you're not going to be required to file a tax return. If you're married filing jointly and both spouses are age 65 or older, then that's going to be $27,800. Now, if you're over age 65 or 65 and over, and you're single or head of household, you're going to add $1,700 to that. So that's single $14,250, head of household is $20,500. So those are your figures, guys. That is your filing requirement, and your filing status relates to your filing requirement. Now, what if you can qualify as a dependent? The thing is with dependents is they are entitled to a lesser deduction than the individual taxpayer. So if you can be claimed as a dependent, regardless of whether you were claimed or not, you are only entitled to the lesser deduction. So the filing requirement is going to align with that standard deduction, but it looks a little bit different. So if you're a dependent and you have unearned income of over $1,100, you're going to be required to file a tax return. Now, what's unearned income? Unearned income is basically investment income. So your interest, your dividends, your income from flow-through entities, rents, royalties, passive income, unearned income. Now, this is where it looks a little bit more like the standard deduction. Any unearned income of over $12,200 plus $350, and the dependent is going to be required to file a tax return. Now that lines up with your individual standard deduction or your single standard deduction of $12,550. The dependent doesn't automatically get that. What they get is an amount of up to their earned income plus $350, and it does max out at the $12,550. So if your dependent made earned income of $1,000, their standard deduction would be $1,350. If they made up over that total $12,550, they are going to be required to file a tax return. Now, going back to the unearned income, if you are the parent or guardian and you choose or elect to report that unearned income for your dependent on your tax return, the dependent is then not required to file a tax return. That is regardless of the amount. Even if the amount is over $1,100, if you elect to file the tax return and report that income on your return, the dependent wouldn't be required to. So some other requirements that is going to require you to file a tax return is if you are self-employed and you had net income of over $400, you're required to file a tax return. If you have wages earned from a church the very specific amount of $108.20, you are required to file a tax return. There are some tax liabilities that you have to look at. If you have those, you're going to be required to file a tax return, regardless of those earlier standard deduction requirements we talked about. If you are liable for alternative minimum tax, if you have household employment taxes, if you have additional taxes on HSAs or savings accounts, if you have net investment income taxes, so if you have investments where you're going to be subject to the net investment income tax, you're going to have to file a tax return and report that. The net investment income tax is in addition to your ordinary income tax. Any recapture of credits, so like the first-time home buyer credit or any employer-provided child care credits, you're going to have to report or file a tax return to report those if they needed to be recaptured. So there are instances where you are required to file a tax return in addition to those filing requirements we talked about. So if you have any special circumstances, I strongly recommend that you speak to your tax professional about those and make sure that you are filing if you need to be. So when you're not required to file is if you had only tax exempt or non-taxable income, but that can also get tricky because it's always that until it's not. So as an example, inheritance. An inheritance is generally non-taxable. If you received cash as an inheritance, that's generally non-taxable. However, if you received real property as an inheritance, then you sold that real property. Any gain on the sale of that real property would be taxable. So then you would need to file a tax return. Gifts are not taxable to the recipient, the receiver of the gift. However, the giver of the gift has to file a gift tax return if they gave a gift over the annual exclusion amount. However, it won't be taxable to them as long as it was within their lifetime gift exclusion amount. However, you, as the recipient of the gift, the receiver of the gift, you would not be required to file a tax return because gifts are non-taxable to you. Refunds and reimbursements. It's just returning money that you paid out, any out-of-pocket expenses that you incurred and were repaid for. That's not taxable income to you. You don't have to file a tax return for that and report that in gross income. Social Security is generally non-taxable unless you have made other income in addition to that, or you are married filing separately. If you're married filing separately, a portion of your Social Security income may be taxable. If you had income in addition to your Social Security income of over $25,000 single, a portion of that Social Security is going to be taxable or includable in gross income. You'll want to file a tax return. Likewise, that amount is $35,000 if you're married filing jointly. Now, there's also some situations you may consider filing whether you're required or not, and that's when you have income that's going to be reported to IRS. So the payer of the income reported that to the IRS under your Social Security name, your business name, whatever, what have you. You may want to go ahead and file to save yourself any future headaches. Because if that income is being reported to you, and especially if it's been reported incorrectly, the IRS is going to either calculate the tax due on their own and send you a notice, or they'll simply send you a notice that you did not report and you were required to. So to save yourself any hassle with that, if you have income coming to you that you know has been reported to the IRS, that's W-2 income, 1099, that's 1099 miscellaneous, INT, DIV, 1099B, there's a whole plethora of them. Income reported to the IRS, you really do want to go ahead and file a tax return, whether or not you were underneath the filing requirements. Withholdings and estimates. If you received income where there were federal income tax withholdings or you paid any estimated tax payments, you'll want to file a tax return to see if you're going to go ahead and get any of those amounts back. There may be tax credits that you're entitled to, such as the Earned Income credit, the Child Tax Credit, Dependent Care Credit, Recovery Rebate Credit, Education Credits, if not for yourself or your dependents. So there's a whole host of tax credits that you might be entitled to, and you might want to file a tax return for just in case, so you can get those credits. All right, well, I certainly hope that you did enjoy this video and got lots of good information from it. If you have any questions or would like any additional information, you can visit us at tmtaxpractices.com or shoot us an email at info@tmtaxpractices.com. Like, subscribe, connect, do all those good things using the links below for YouTube, Facebook, LinkedIn, and Instagram. Thanks so much. Have a great day, guys.